Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we will continue to talk on the cable because mostly among the major currencies we do not see really significant action, except maybe New Zealand dollar due to the recent rate cut from the National Bank. But it's really even this drop that we've got on the New Zealand dollar hasn't changed the picture on the daily chart significantly. That's why, in fact, among the major currencies, we have declared trading pattern only on the cable. That's why we will continue to talk on it, since we see some progress here and some moments to discuss exist here. First of all, let's take a look again on the daily chart. We see that already right now we already have the two closes above the 3x3. So that was the first close, it's the second, yesterday was the second one, and here is the third is forming. So in fact, today market has the last session where it could reach, for example, some higher resistance, maybe 50% as we said, maybe 618, and keep the bread and butter setup valid. I'm not sure that this will happen, and probabilities mostly tell that it should not happen, but who knows. In other words, if market, for example, will reach the 50% level today, this will not mean that bread and butter setup has failed. It just will mean that probably the downward action could start from a bit higher level. So that's why we need to see what will happen. But here, guys, we have another issue that has been formed yesterday, and that issue is bearish grabber. So the bearish grabber that has been formed yesterday, I will show you. Just increase. You can see this market has opened here, has tested the MACD predictor line, has tried to shift trend to the bullish side, but later has failed and closed below the MACD predictor. This is the bearish grabber. The bearish grabber, as you know, suggests the taking out of the previous lows, and this low stands right here. So this pattern even increases the potential target that market could reach in the nearest future, because bread and butter suggests the move only till the 618 support of this backward action against the thrust. That's the nature of the bread and butter trade. But grabber suggests even further action below these lows, and in general the grabber coincides with the target that we have based on the Great British Pound grabber on the monthly chart. It agrees with the direction and the depth of the possible action, because on the monthly chart we also have the pattern that suggests deeper action to the downside, but in the longer perspective. Anyway, the appearing of the grabber here is the positive sign for the bears, because it points on the same direction and confirms the same that bread and butter tells us, but from the just another side, because they are two different patterns of different nature. So that's mostly based on the momentum trade, but this mostly based on the failure trend shifting. So that's based on the trend, that based on the impulse on the momentum on the market mechanics. I mean the bread and butter. So, and that in general, as you understand, should increase our confidence in the possible downward continuation. So the grabber here is just a gift for the bears from the cable. So now let's see what we have on the intraday charts. On the 4-hour time frame chart, our forum member Achels have told on the forum that it's also not just the fib level but also the confidence resistance. That's really good observation. So because as you know, the confidence levels are usually stronger than the just single level, and so if we will draw here the 618 resistance of this most recent, from this reaction point to this focus number, we also will get the 618 resistance here. It's 153.76, and that's, you can see, this is the resistance cluster where market right now is still coiling. next level, next time frame is the hourly chart, and probably it will be very important for us in the nearest perspective, because here you could see some important moments. First of all, that's the target of the bread and butter, 5260 area, 618 support of the whole action against the thrust. That's the level that market should reach based on the bread and butter future, bread and butter rules of trading. But also I would like to talk about some, if you let me to name it as the negative moments for the bears, setup for the bread and butter. First of all, it's of course the flag pattern, and this flag is bullish. That's not very good for the bears. It's not really mean that market will definitely continue move high and bread and butter will fail, but the shape when it's forming is mostly reminds a retracement, and when the market really looks stubborn and heavy in a possible upward action, it always makes traders nervous, because they have taken the short position. They would like to see the market shows action to the downside, and this action is gradual, but you can see that market is very stubborn, and here is bounce up, deep retracement, some it's really stubborn actions. Market looks really strong support here, is downward action, and again we've got here the upward retracement to the upside, significant retracement now, deep retracements inside of the flag. That's always some kind of the gambling the weather market will continue move high, lower, or what if this setup will fail, or some unnecessary thoughts come into the mind when you're looking for this action, and when you have taken the short position. But as you know, the flag pattern also could fail, and market could show the opposite breakout. And of course, currently what we have on the daily chart, this grabber and the bread and butter, they of course have the greater value in the analysis because they stand on the daily. This is the directional setups, directional patterns, and we have the flag pattern even on the hourly chart. And of course, it has the less value compares to less importance for overall analysis. And the second moment here, as I said, is the nature of the action. So it's definitely not the thrust down. It's definitely some kind of the retracement. It's very choppy and sloppy action inside of the flag consolidation. But still, as you can see, market right now stands at the deep retracement. Still, we should also acknowledge that the risk is also very small. You maybe do not like the way how market acts right now, but take a look. Market right now stands at the 618 resistance of the downward action. It's approximately 53.80 area, and an validation point, for example, for the grabber, if we would stick with this pattern with our short entry, and if we will use this pattern for short entry, stands above the top of the grabber. So that's risk approximately 30 pips. You probably agree with me that 30 pips for the daily trade when the potential profit approximately with the 200 pips is not really big victim. So that's just you need to think about it, and just you need to value the benefits and the possible losses and the overall situation, and make the final decision. Would you like to take this trade or not? Besides, the grabber promises even greater target, so this is only the halfway to the downside, but grabber tells that we will take out these lows. This is another 150 pips, so 30 pips, it's really, I think it's not really significant possible loss for this trade. You could wait, for example, for another patterns. Since, as I said, market has still the day for a possible upward action. Who knows? Maybe market will form head and shoulders here. Maybe market will form the butterfly. As we said yesterday, we have expected the butterfly, but as soon as market had taken out of these lows, butterfly has failed. Market shows some downward pressure here. This also could happen. So you could wait for something more, or you could wait, for example, for the breakout of the flag and take the position on some minor retracement back to the testing of this lower border of the flag. That's also the another approach for the trading. This also is possible and is reasonable. So everybody choose the ways how it will enter, what it will watch for, that is suitable personally for him and suitable for its personal mentality and for its personality, how it usually trades, that should be comfortable. First of all, mentally it should be comfortable for a trader to take the position, and the way how it will enter should be very personal. So anyway, we have discussed already the major moments on the Great British Pound. Setup is really interesting, and it's really promising. Targets are not really small, so I think that's worth of our attention. So let's see how it will go further, what we'll see today and tomorrow's sessions.